right, guys, we're back again. Another great episode from PFREI. I'm your host, Fuquan Bilal. It's passion for real estate investments, in case you don't know. Today, I have a good friend of mine and a special guest, Chris Smiles, the cash flow expert and anti-financial advisor. Can't leave that part out, Chris. Now, he's a leading authority teaching entrepreneurs and professionals how to get their money working for them today. He's also an author, podcast host of the Money Ripples podcast. You want to make sure you guys check that out. How many episodes you have now, Chris? Like
Oh
400,
man, I think
500?
we're over 660 now.
Wow. How many downloads? 10 million?
Almost a million. Yeah, we're
Almost a
just
million.
hanging short of a million right now.
Pretty impressive. He's also an author. I think I mentioned that already. He's been featured on U.S. News, CNN Money, Entrepreneurs on Fire, Bigger Pockets, and has a proven reputation with this company, Money Ripples. And you can check that out at moneyripples.com. He get his clients fast financial results. In fact, his personal clients have increased their cash flows by 300 million in the last 12 years. Wow, that's impressive. I'm one of those clients, by the way. That's awesome. Let's talk about that. Where we are in the marketplace. Just to put a date on it, it's fourth quarter, 2022. We're going to 23. There's been a lot of disruption in the market, interest rates increasing, everyone's running for the hills. Some people are still having success in certain marketplaces. Some people are not. A lot of people are talking about gearing up to be laying off and everything else. So I wanted to bring you on the show to speak about that because I think you have the opportunity from the position you're in to deal with a lot of different fund managers, a lot of different investors to kind of see, what's the best option for your investments. And also, you have some of your clients that invest in some of these alternative investments, and they kind of bring you back information, I'm sure, what they're seeing with some of their investments and things that they're involved in. So let's speak to that. Welcome to the show. I definitely appreciate you coming on, man. It's always an honor. I learned so much from you. Let's just get started. Let's go back a little bit. That last part of this last sentence I mentioned, increasing the cash flow. I know you all about that. I know you're not into stock market. So just talk a little bit. I had you on the show before, I believe. I had you on the show. So let's talk a little bit about, give first some quick background on the update, and then we can jump into the current marketplace.
Yeah, I used to be a guy that actually loved the stock market at one point, right? When I was the salesman in a suit, AKA financial advisor. I used to do that thing back in the day. But it's interesting. My path actually started with my parents. My parents were good, hardworking people that taught me good values. But the one thing they didn't really teach me much about was money, right? Like, in fact, when they did teach me about money, it was never a positive conversation. It was always a thing of scarcity. We don't have enough money. We can't afford this. We think money grows on trees. I'm not made of money, all this kind of phrase you hear growing up. The worst one that stuck with me was my dad, where he said, "Chris, I'm going to work until I'm dead." And
Wow.
he really believed that. Now, he was the kind of guy that Dave Ramsey would look up to, because my dad was penny pincher, right? I mean, it was so much so that this guy would be the kind of guy that would steal the little penny change thing on the side of a 7-Eleven counter. Like, the guy at the 7-Eleven counter would have to hide it from my dad because he knew my dad would come in, right? He's that kind of penny pincher. He just takes out of the tray. I mean, so he was a saver. He paid off his house early. He was so proud he was debt free. And then, but I remember him just saying he would work till he's dead. Like, he would never have enough. So, when I went to college, I was planning on becoming a business consultant at some point. And I thought, well, if I'm going to do that, I should have real life business experience. I should do some sort of entrepreneur activity. So I dropped out of college. It was supposed to be a sabbatical temporarily. I ended up staying dropped out forever. But I dropped out, and I was like, well, what kind of business can I do? And that's where becoming a financial advisor came up. And I remember thinking, you know what, if I can learn about this, not only is it good for me to learn about money, but it'd be great for my dad. If I can give him just a year of his life back, that'd be worth it. So a few years later, my dad says, "Hey, I want you to start giving me advice," instead of the other way around, where he was giving me advice. Well, we sit down at his table and I look over his numbers. He's like, "All right, Chris, I'm 61 years old. I want to quit working at some point. What do you see? What can I do?" And I looked at it, and I'm looking at his money. I said, "Dad, if I'm to be honest with you, let's just say you have to die in the next 5 years, because you're going to run out of money. If it weren't for Social Security, you probably would have to die literally in 5 years." And he's saying, all right, Chris, that's not the answer I was looking for. So what do I do? I don't know. You've done everything right. Like you've paid off your debt. You're saving your 401k and funding that and doing everything you should be doing. I don't have anything else for you that I could guarantee that you would be better off doing with me than you would with what you've already been doing. And that hit me because I realized, wait a minute, my dad's not financially free after doing everything right. And then I started to look at, the evidence, right? That little string of evidence. I'm like, wait, all my other clients, even the ones that have had decades of financial advisors helping them, they're not financially free either. And even worse, if anybody should have it figured out, it's the financial advisors, and they're not financially free if it weren't for the commissions they're earning, right? So
Yeah.
really, you're looking at this, you're like, why am I selling this crap? Just because I get paid? And so I had to make that choice, that value call, and I eventually quit. I said, I can't do this anymore. I will just be a mortgage broker and teach ballroom dancing. And so I did
Ballroom
that for a little
dancing.
while. But I had friends that I'd heard that were doing real estate investing, and some of them were financially independent, even in their 20s and 30s. So I eventually kind of got in with those guys. And by the time later that year, after I quit, I was actually financially independent myself. And I was 28 years old. I'm like, what am I going to do with my life? And several months later, that's when I decided I was going to start teaching people how to do it. Because, well, honestly, I mean, people were asking me that question anyways, right? They're like, wait, you're 28 years old. How are you retired? That's impossible, right? And I thought it was too, yeah, from a financial advisor perspective, but it really was about that passive income, that cash flow. And so that's what's kind of led me down the path today. And what we're teaching people to do is create, that really financial freedom is based on cash flow. How much income do you have coming in? Because nobody cares about how much you save up. It's always about what actual income can I get off of this, while I'm alive. And the way we teach that is so much better than anything financial advisors teach nowadays.
Yeah, thanks for going through that. Now let's talk about the real estate market and what do you see happening? What do some of the people in your circles see happening? And then what pivots are they making to adjust?
Yeah, I mean, the cool thing is guys like like you guys are pivoting, like you're already moving and maneuvering, and you're not really super concerned or worried. I know there's many people that are, and those people are usually the one trick ponies, right? The people that have one strategy they know what to do with real estate and they don't know how to do anything else. But those that have been around the block, like you, Bhagwan, like you guys know that if you have to shift and maneuver and change things up, you can always make money in real estate, even if prices go down. I mean, right now we're starting to see, especially here in the western half of the United States, not so much, in like the Midwest, Southeast, or even some parts of the Northeast too. I don't know, you know that better than anybody, but like we're seeing price softening big time out here in the West already. Like prices are dropping, but investors are still like gobbling it up. I just interviewed a guy on my podcast. He's like, man, I'm not doing the usual flips anymore, but I am doing terms. He's like, seller financing has been awesome for us. Like we're making more money now because now we're able to figure out our own interest rates and our own terms. We don't have to worry about bank financing and things like that. We're be able to get the sellers and be able to get these houses in. It's almost a buyer's market for us currently. So they're like frothing at the mouth while most people are saying, oh, the prices are just too high. I wish they'd come down. He's like, they're already coming down. Like we're already getting good deals. Like it's already happening. So, and that's the thing with everything in the markets, whatever you hear on the news is already like old news. It's already after the fact.
Yeah, that's what I was just saying this morning, actually. I was driving my son to school and a thought just came to my mind is like, why am I not concerned? Why am I not worried? Why am I not panicking? And I don't know why I was thinking that. And as I was driving, I was like, everybody else is in a state of panic. And I just feel like so calm, right? It's like,
Uh-huh.
what I mean? I just listed a house 6 days ago and I got a contract on it. I accepted list price. Actually, it was 3,000 less than list price. So I listed it for 473. They offered 465. I counted back at 470. Boom, done deal.
Mm-hmm.
And then I had another listing. It sat on the market for about another month. And I mean, to me, that's still not bad. That's regular real estate listings. You list it, and
Yeah.
within 45 to 60 days, you get a contract, and another 45 days of closing, and you're done. So we're seeing some parts of the market softening here, but what we're seeing is we're not seeing 30 people standing outside of the property in size order, lining up, waiting to get in. Right? We're not
Yeah.
seeing 30 offers made in a property.
Uh-huh.
We're seeing maybe 12 now. So
Yeah.
still, to me, is like,
It's
okay,
still good.
it's still good. So I was like, I don't. When you watch the news and you hear, because we're masterminds together, and there's a lot of investors that are nationwide, all the way from the West Coast all the way over, and you hear different stories from different pockets of the US. And it's just like, again, why am I not concerned? Again, because that pivoting, right? That PTSD from 2008, I guess. But yeah,
That's right.
what are some of your concerns with what's happening with, interest rates, if you want to speak to that, and how can that be detrimental to someone who don't have their eye on the ball, is not preparing?
Interest rates, it's an interesting game because for the most part, it shouldn't worry you too much, but it does mean that you have to be careful of certain strategies like debt leverage, right? I mean, we're pretty big proponents of leveraging debt wisely, right? Being a wise steward of your money. If you're going to use it for investing, make sure you're buying real assets, not gambling by throwing it into Bitcoin or something like that. But right now, like HELOCs, I've been telling people right now, I'm like, HELOCs are still okay, like compared to getting a 30-year fix, but and that's only okay because of the payment, right? Because you want the payment to be much lower than whatever you're investing and creating from there. So you have to really know your numbers well before you try to leverage equity like that. I do actually have a contact though. What's interesting is that he's an investor or partners up with you. You can actually access your equity up to 75% of your home's value, and not have a payment. So he actually will give you the money as an investor, and then you just pay on the back end whenever you sell or refinance. You cut some, split some of the appreciation, the profits there. So that's
I like
kind of a
that.
cool method you can kind of get around. That's the thing, is like there's always a way around it. And the whole reason I thought of him, I remember interviewing him 2 years ago on my podcast. Totally forgot about him because HELOC rates had dropped. We're just like going HELOC crazy. But then as rates have come back up, I'm thinking, well, what are easy ways to access equity? What if you didn't have to have a payment? Like, what if you can just do equity, like be an investor, like going in with an investor that way and have the investor, make a profit off of it too, off of the equity on the back end while you're making money in the meantime. So there's things like that. But interest rates, I think the biggest worry I have is people that are really, they've got high interest credit card debt, things like that. Maybe they've run up those credit cards. Before you worry about investing, get those things paid off. Like it's great to invest, but if you got that, 18, 20% plus 30% credit card that's bogging you down, and you think of it from a cash flow standpoint, say that, for example, you have $30,000 credit card debt and say it's costing you $1,000 a month. It's not very likely you can go do a real estate deal with Quan or ourselves or anything else and take 30,000 and make $1,000 a month, right? 12,000 a year. You're just not going to do that. If someone gives us $30,000, you might say, cool, well, maybe you can make 3,000 a year, but paying off a credit card is a guaranteed cash flow return, right? So looking at that, and that's the one thing that really, when we talk about cash flow before, freeing up cash flow, not just making passive income, but also freeing up cash flow. That's one place we look is, can we do things there? Or could we consolidate it? Can we do can we actually get equity from your home and use that to be able to pay off certain loans, and while keeping the other ones, leaving them alone because they're good interest rates or they have a really low payment for the balance, things like that. That's the kind of strategies that we look at.
So let me get this right. So for the audience here, because I really want people to, reach out to you when they have the opportunity. You help clients really strategize and look at their whole portfolio or what they have going on and try to figure out different strategies or things that they can do for maybe liquid they have, for maybe equity they have, and help them maybe reduce debt in order to increase cash flow.
Exactly.
Is it
Yeah.
okay? Yeah.
We look at the whole equation, right? We're looking at income, expenses. We're looking at your whole balance sheet. And we're really looking to see, like, where are your resources? Like, where can we improve the cash flow situation? Either one, free up cash flow by lowering expenses. And it doesn't mean you have to be cheap. We don't talk about living on rice and beans here. We're not Dave Ramsey fans that way. We actually want you to enjoy life, and not just suffer and suck, So yeah, we do actually talk about ways to free up cash flow, like we talked about there. Could we pay off certain loans, freeing up more cash? We actually had one client. I mean, this client has like $5 million sitting in individual stocks and mutual funds, right? I mean, just ridiculous. Some of it in like Google, which has been hammered this year. Same thing with Facebook. She has Facebook stock, like $1 million in Facebook getting hammered. And it's like, okay, that sucks, And as we looked at the situation, the first thing we saw is, wait a minute. Hey, if we actually did a refinance of your mortgage and did a few other things, paid off some of these loans with some of the cash you have, we'll actually free up $4,000 a month. So we freed up about $4,000 a month before we even did any investing. And that brought her, that financial independence number or freedom number, depending on who you're talking to, right? Brought it down from $22,000 a month down to $18,000 a month. So now it just made it easier to get to her financial independence number, right? Well, now from there, it's like, great. Now let's get those monies moved out and moved to places where you actually generate real passive income. So like you actually came up in that conversation because you're one of those people that we refer to. We don't raise any capital ourselves. We're not taking your money and investing it. We're connecting you with those deals, So, when we're looking at situations saying, hey, you need more cash flow, these are the good options you could look at for getting more cash flow and passive income right now. Or you're looking more for growth. Great. Here's some great, good growth options. But we try to really help point you the right direction and say, here, get rid of these bright, shiny objects over here. This is where you should be putting your focus based on your situation, your goals. Here's the investments that might best fit with that. And then we're not investment advisors. We never say you should do this or do that. But we do offer enough guidance and be able to really be a sounding board for somebody to say, hey, I'm looking at this deal. It looks good. I have a few concerns. What are your thoughts? Because you're not on their payroll, Chris, right? It's like, yeah, here's some things you should consider. But, like this person's got a great track record. This is what they've done. No guarantees, of course, but check this out. Give you another example. We had a guy that was actually just retired from the military in California. He had $1 million in his pension plan. And of course, he goes to his financial advisor. And here's the thing. This is the thing as financial advisor, when I used to be one, that I saw as a big problem, is that if you don't want to run out of money in the future, at most, you should not be pulling out any more than 3% of your money. There used to be the whole 4% rule, they said, but that one has already been misproven many times. Even 15, 20 years ago, we questioned the 4% rule if it was too much, with people living longer. Well, even the Wall Street Journal came out and says, nope, it's 3%. That's the max you should be pulling out. So think about it. He has $1 million, and then the financial advisor who obeyed that kind of 3% rule said, you should only pull out $30,000 a year before you get taxed. So think about it. After tax and everything, he's living on maybe $2,000 a month. He's a millionaire living on $2,000 a month. That's below the poverty line. There's people that literally making minimum wage, making more money than him, in retirement, right? You think that sucks. And that's what he thought. And so he came to us. He said, hey, are there other things we can do? Because I know I could probably do something else. And so we started looking at places like with multifamily. He did some turnkeys. He did some things with lending. He's even done some stuff now with like the oil and gas industry and mineral rights and things like that. And now instead of $30,000 a year he's living on, now it's over $130,000 a year. And wow. A lot of that even has some tax breaks too.
Yeah, that's awesome, man. So what is the if I would say the average with inflation, what is the average return that an investor you see needs to make in order to hedge, inflation? Is it between 10 and 15%, 10 and 12%? What are you seeing out there on average that someone should try to target to hedge against inflation in today's market?
It depends on who you listen to about what inflation numbers really are, right? I mean, if you're one of those people out there that trust the government, that they have your best interests at heart and that they never fudge with the numbers at all, like they have since the Carter administration, when they started messing with inflation numbers, one place you can go to is shadowstats.com. Shadow Stats, they actually talk about the real inflation rate based on the 1970s before they started altering it. And it's not Republicans or Democrats, it's both of them, right? And you look at the real inflation rate, it was over 15% last year, not 8.2 or whatever, So it's more like about 5 to 7% more than whatever they say. So if they say that 2% goal, usually you're looking at inflation being at least 7-8% typically. Now I think that's what you should normally be trying to beat, is I would say at least 10% to do that. And you won't get that in the stock market, just so you know. The stock market return for the last 30 years, and I just ran the numbers again last week just to make sure of it, right? The stock market return was about 7.7% in the S&P 500. That was the average for the last 30 years. That's even after the last decade.
I'm glad you mentioned that, because I have some people I speak to, they go, oh, I made 12%. This was before it started to decline. They said I made 12, 15%. I'm like, okay, what was the 30-year average? Like how long over the years that you've been investing, and what is that average? Not what you just did last year, because that, 15% can go down to zero, or you can lose that, as many people did. It's quite interesting where the marketplace is going, where we are, and people are not pivoting fast enough. We talked about that earlier, knowing how to pivot and do certain things and be ahead of it. And I think a lot of guys who just came into the space, 5 years ago, those guys I think are going to be in trouble. I'm seeing signs of it now. Even new mortgage companies that open up, they're going out of business. They're shutting down because they can't do refinances anymore. I just saw a post today. Somebody said their truck got repoed, and if you scroll down on his Facebook page, A month ago, he was talking about teaching people how to flip houses and do other stuff. I'm like, what is going on out here? Like, it's a lot of that, pretenders that are out here. So you want to be careful with that and who you're getting the
Totally agree.
information from. That's what my goal with this podcast is, to bring people who have a track record, people who I know who will kind of give you the right information. Of course, you have to do your own due diligence and verify the information you're receiving here, but for the most part, a lot of the people that we interview are active people who've been through 2008, who kind of seen, the worst of the worst, I guess. So, yeah, make sure you guys go check out the website, moneyripples.com. Just before we close out, let's just talk a little bit more about, got to turn that off. That's my alert. Anyway, talk more about the whole life and the other services that you provide and the benefits of that. So, how Chris and I met years ago, he was doing a presentation that was very intriguing, and we go on runs a lot. He's also, he runs marathons and everything else. He just did the Chicago Marathon, right?
I
Was that
did, yeah.
that was a half a marathon or full marathon?
That was a
Full
full.
marathon. Yeah, full marathon. He ran it like in 10 minutes. I was joking. No, so,
I
but no,
wish.
but that was good. I saw your timing. That was great. But we are at a lot of events. We speak together. We speak on stage a lot. And you did a presentation years ago that was very intriguing. That kind of opened my mind up to look more into, the services you provide. And I, of course, became a client. And there's other things that I'm looking to do now with what you taught me. So let's speak a little bit about that for the audience. And then we'll kind of close out with that.
Yeah. So in addition to what we do on the consulting side, helping people create that more alternative type plan, right? That anti-financial plan, or so to speak. Then we also do that infinite banking strategy as well to help enhance what you're doing. Not required for financial freedom. I mean, obviously that's what we do on the consulting side more, but if you want to enhance and be able to earn returns on your money in two places at the same time, that's where this infinite banking strategy comes into play. Now, you'll hear a lot of people, if you've ever gone down the rabbit hole of infinite banking, really all it is somebody's using whole life insurance policies, which has a cash value tax-free savings account component to it, as well as a death benefit. So they have both. Where term insurance is just a death benefit, whole life's got this living benefit with cash value. Well, this tax-free supercharged savings account that pays you better than 0.0% like at the bank, right? You can grow your money in there. The problem is most people, when they set up these whole life policies, don't set them up that way. In fact, the first policy I bought from an agent who was a real estate investor, he was saying, oh, no, you don't want to put more into this. You just want to put the basic minimum. And the reason he said that is because he wanted me to basically pay his commissions more. And I found out later that was bull crap. I even asked him point blank if I could put more, and he said, no, you can't do that. You'll break it. Well, he was wrong. He was always trying to teach it as a supplemental retirement down the road, or something you can buy cars with or whatever, and not owe the bank money. But I found out that if you design it right, kind of like what we had done Fuquan, right? You can actually do it to where there's the lowest cost possible while getting the highest return you could possibly get in that kind of plan. And so what it allows you to do is build up this tax-free supercharged savings account on the side that you can then get a line of credit against, whether it be from a bank or from the insurance company, borrow. And so the money's still in there earning compound interest tax-free, but now you're able to borrow from that insurance company and then use it for whatever the heck you want. There's no limitations. So you can use it to go invest in real estate. You can invest in your own business. You can invest in, you blow it in Vegas, although I don't recommend it, right? But you can do anything. There's no rules or limits. It's not like an IRA or 401k where they say, well, you can only use it in this way, like a robot. No, you can use it for whatever you want. The reason why we want to get a line of credit against it and pay interest on that money, right? Because the thing is, we're earning interest on all that money. So the interest we're earning is more than what we're paying to the bank or to the insurance company. So we make money there, and we can still use that money to invest. So it's not either or. It's basically have your cake and eat it too. It's not like, well, I can either put money in this plan and let it sit there for decades, or I can invest in real estate, make money now. It's like, no, don't use this plan for decades down the road, which you could do. Instead, use that money now to invest in real estate and earn money in two places at the same time. It's a really cool strategy if you do it right.
Yeah, that's awesome, man. Thanks for sharing. I appreciate all the wisdom and knowledge that you bring. It's been great chatting with you on the show. All right, guys, it's another great episode, and we're actually back like we never left. This is one of the first episodes. I guess we call this the second season. We recorded over 100 podcasts, and I just needed a break. I was doing so much, and I said, I need to take some time and focus, family, and laser focus on my team. And now we're back like we never left, and I'm excited. This is awesome. We have a lot of great stuff in store for you guys, so stay tuned in. Another great episode with my friend Chris Smiles, PFREI, a passion for real estate investments. Make sure you guys check out the website, pfrei.co. And that's it. That's all I got.